Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hello and welcome to ET Markets Crypto TV, presented by CoinSwitch Kuber. Our attempt here to understand crypto and the landscape that it operates in. In 2021, India apparently recorded the second highest number of crypto users around the world after Vietnam. This is data as per Chainalysis, a blockchain trading firm that looked at trading activity of non-professional users and peer-to-peer exchange trade volume. In 2021, India attracted crypto funding and blockchain investments worth $638 million. Now, this is as per industry tracker Traction. But a more worrying trend is this. Indians visited crypto scam websites about 9.6 million times in 2021. This is a massive cause for concern as crypto fraud has been on the rise. So, in the light of all this data, can you insure your crypto? I'm Maloni Bhatt, and today I'm pleased to have with me Rachit Chawla, founder and CEO of Finway Financial Services Company that offers a spectrum of lending services. Rachit graduated in business and management from Aston University, Birmingham, UK. Rachit, thank you very much for your time today.
Thank you for having me, Miloni.
So, Rachit, you can insure your assets, you can insure your house, and then, as part of that, gold, you can insure your car. Can you insure crypto?
So, Miloni, right now, insuring crypto, I think, is probably a lot of steps away. We are in a situation where countries globally are trying to decode what is crypto, how can they regulate cryptos. A lot of rumors because the social media is very active these days. They run and you see the price get up and down, 10% here and there in no time. So insurance doesn't seem possible right now. A lot of companies are putting their head around it because ultimately the work of insurance is to insure an asset class. Now, clearly, crypto has become an asset class. It's a digital asset class. But insurance company will earn money out of it when they're able to tell the consumers that we are securing your asset. In case tomorrow something goes wrong, we will pay you. And they charge premium, and that's how they earn. Right now, they are not able to provide a solution to a basic problem that when this asset goes away or goes down because there's cyber security issues, there's hacking issues, and you rightly said, in India itself, there has been 9.6 million times people have used wrong websites to, where they have lost their cryptos. There is no company right now which is able to say that I'm able to offer that solution. Why don't you insure your cryptos and give me a premium and I will insure it? Till now, there is nothing called as crypto insurance. There are ways which have come up where you can make your crypto more secured. So earlier, there used to be only digital wallet, but now there are options of cold storage also. There are big exchanges which are there, like, Binance is there, which is probably world's largest exchange. There are new and new exchanges coming up. So probably it is becoming better, but I would also like to, mention here that during this interview, I would use analogy of stock markets with crypto just for the users so that they can easily understand. So similarly, when stock market had just launched, there were no insurance or maybe insurers for a couple of years. People first will understand this in detail, see how they can make a buck, and then provide insurance as a service. So similar with crypto, since it's a very new asset class, maximum a decade old, right? And right now, people are not able to regulate it. People are not able to understand the science behind it. There is a lot of hacking going on. There's a lot of negativity, fluctuations, volatility. So that's why right now insurance is too far fetched. So to answer your question, no, you cannot insure it right now.
Okay. So now, for instance, if you buy and sell crypto through an exchange and the exchange holds your crypto, does that provide any sort of insurance against theft, for instance? I would assume that exchanges would be covered.
So exchanges have become a lot asset rich right now. Like if you see Binance, it's valued at multiple of $1 billion. Why they are doing it? Because they're the pioneers in exchange of Bitcoin and all sorts of cryptocurrency. And certain people have given them that kind of valuation. They say that it is verified by the exchange. That means the exchange is acknowledging the fact that the crypto is lying with the exchange. But as I said, this is virtual currency. Nobody is actually holding it. It's not tangible in nature. So till the time they are saying it's verified, it's with them, people take it that okay, it's a big company and it's insured. But tomorrow, if something goes south, I do not see how they'll be able to protect the interest, because it is risky at end of the day. And the kind of returns these digital assets have given, it's highly rewarding. It's because the very nature is extremely risky. So it's a very tricky situation to be in. You are at the mercy of these exchanges. That is the crude way of putting it. Tomorrow, if something goes south with these exchanges, you cannot blame anybody. I know a lot of people who come to me saying, I went to pledge this crypto on a website which exactly looked like a big crypto exchange, and I pledged it, and then I saw it going away from my wallet. How do I get it back? He cannot get it back. The consumers have lost that crypto just because they could not see the URL correctly. So the imagine if, as an investor, there are so many brains who are hacking and trying to steal your digital assets at the same time when you're trying to protect it. So right now it is actually consumers versus the people who are trying to snatch those assets from you.
So, what about the crypto wallet? How insured are you if you transact through a wallet?
So crypto wallet is secured, as I said. If I talk about a cold storage, that's also secured. If I talk about a pen drive, that's also secured. Only till the point that you don't lose it. So let's talk about the wallet, right? The crypto wallet.
Hmm.
If you lose your 16-digit secret pin, then it's not secured. Anybody can make your wallet very vulnerable. They can steal the cryptos. Since there is no regulations, you cannot do anything about it. You cannot go after it. We are talking about web version 3,
Hmm.
but we are not yet able to secure ourselves from the current web version, the current internet. There are a lot of news that
Web
goes
2.0.
around
Yeah.
cybersecurity, and the governments are not equipped to go after the people who are trying to take something which is not there, and they're not able to take any steps against them. So it is a virtual world that we are talking about. Protecting it needs a lot of focus, ensuring that you don't lose it, you don't forget about it, because people also, since the password is very lengthy in nature, they
Hmm.
forget also. So when you forget it, you cannot get it back. So there are a lot of things that you need to do in order to protect it, and the consumers need to be aware about all the risk which these digital assets carry with them. They see the news that x amount of person has taken a gain of 1,000%, and because of fear of missing out, they jump into it. But they need to actually take into account all the risk associated with it, and be very careful when they are dealing with digital assets.
So, there's no way that you can insure your crypto wallet. What about NFTs, which are tipped to be the next big thing in the world of special collectibles? Can you insure an NFT?
Miloni, there are companies which says that you can insure NFT. Very recently, few companies have started. I don't know how good or bad they are, but to be honest, NFT also is too soon to comment on insurance, because
Hmm.
nothing wrong has happened till now in NFT space. What if we insure it and tomorrow it will be a learning curve for everybody dealing with NFTs, and the insurance company is not able to honor their commitments? What is the consumer going to do? Since there is no government. You have to understand from a perspective that there is nobody regulating all these things. It is actually virtually designed by consumers, and customer is also a consumer, and they're doing it between themselves without any regulatory framework. There is nothing regulatory. The government is not able to get their head around. There are so many issues with the previous web version 2.0 that they cannot move at the pace with which the technology is moving. And NFTs is a great example. I mean, people are buying it, people are selling it, all sorts of transactions are happening. But when you talk about insuring it, I think it's again a big gray area. There are companies doing it, but I don't know what will be the learning curve, what will happen when it actually goes south. I do not think so that NFT values can be given back. It is all demand and supply. It is all buyer and seller, and the price discovery is happening every single second. So how can you insure something
Something.
where the price is changing constantly? The underwriting risk of any insurance company is based on a particular price value, right? How can you insure something where the price is so quick and the discovery is happening every second? So all these things are making it too difficult when we talk about insurance in this space. And even as I said, when I will be using analogy of the stock markets, when the stock market was launched, insurance came very later after that. When the government was there, the framework was there, only then insurance company played their role in it. So right now we are in a situation wherein decoding these assets is more important, protecting it is more important, and probably insurance players will come into the picture in times to come.
Many cryptos are reliant on a few platforms. For instance, Ethereum, because it has smart contracts. Is this one of the limitations for insurance because the risk will all be concentrated on a single platform?
Absolutely. As I said, all the cryptos have a unique technology embedded with them. Now, if you have to give a broad, insurance on that digital asset, then you'll have to really get into detail that how to derive the premium out of it, what kind of risk coverage can you give, how can you underwrite it, how can you calculate the premium on it. There are so many gray areas right now. And I would still be concentrating my assets on the big cryptocurrencies, like the macro ones, mainly Bitcoin and Ethereum. But Miloni, the problem is there are so many digital currencies right now. People are not just talking about Ethereum or Bitcoin. If I have to insure something, the list of cryptocurrencies, it's gone beyond numbers, probably more
Mm.
than 7,000 as we speak. Now, in order to understand the technology behind every single crypto which is there, it is again a big task. So that's exactly why no insurance company is actually going and saying that, look, we will protect your digital assets and you buy the insurance from us, pay us the premium, and tomorrow if anything goes wrong, we will be able to cover it. So you don't hear it because you cannot possibly protect it.
Rachit, uh, speaking to you and hearing what you're saying, you said that the business of insurance is to underwrite the risk, right? Greater the risk, bigger the chunk of business it should be for insurance. Now, there is a rise or a spike of digital assets. More and more people across the world are investing. What does the lack of insurance product for a largely unregulated emerging asset class tell us? Yes, it tells us that there are all of these problems. Prices are extremely volatile. We know all of that. But what does that tell us? The fact that insurance companies do not want to get into it for whatever reason, does it tell us that we should be aware, like we should stay away from digital assets?
No, it tells you that the asset you are investing in is too risky. It might go to zero in times to come. It may or it
Therefore,
might
stay
not.
away.
Not stay away, but take, invest only that amount that you are okay and willing to let go of. I wouldn't say stay away because, see, having said everything, crypto has given amazing returns. It's been the greatest asset class since last 10 years. It was nothing, and today it's probably around $42,000. So the kind of return it has given, it's unparalleled to any other asset class. But what I recommend strongly is, rather than worrying about insurance, uh, be aware about the risk associated to it, because there are not one or two, there are many risks associated to it. You can lose this digital asset instantly by a wrong click on any of the web links. There are a lot of web links available on internet right now, which are only there posted by the hackers. It looks exactly the same than the normal websites, and only the purpose of them being there is to take away your digital assets. So you have to be very risk averse, you have to be very careful. I don't recommend going into micro cryptocurrencies. I think staying in Ethereum or Bitcoin is good enough, because they are sort of the micro cryptocurrencies. And also invest that you're willing to go zero. Also, do not, because if you go to exchanges, they have actually opened up future contracts now, like what we do in stock markets. Now it's very risky. What they are doing is that an asset class which moves 10% in a week, which is very normal, they are giving 10x leverage. So if you put in some amount in a week, it goes against you, then you're wiping out your entire capital. So I would strongly suggest to be very careful, not to do over trading. If you love the asset, and if there is any end use connected in terms of technology to you, if you are bullish, then invest to only that extent which will not worry you, which will not create any sort of stress for you, and you're okay to hold it till whenever you get a decent exit for yourself.
I mean, now at a stage where the consumer has to take the onus of protection for assets for themselves, how is it that we can embed consumer protection into virtual digital assets?
So, Miloni, in India, it's a very normal thing that you need to take care of your assets. I mean, we have gold, we have a lot of jewelry. What we do is we put it safely in a locker. Similarly, in digital assets, in cryptos, we have to take the onus, because there are cold storage available. And if you store it there, your asset is safe. Then nobody can take it from you. So, but where people are going wrong is into trading. They want to buy it, they want to sell it, they want to pledge it. They are trying to do too many things at the same time with one single digital assets, that somehow they end up losing it by just clicking on the wrong link, or by providing their unique information, passwords, making it vulnerable for hackers, that they can attack it and take it away from them. So you don't have to do that mistake. Probably put it in a hard drive, or maybe put it in a cold storage, maybe have duplicate copies of it, and keep it very safely, because it's your hard-earned money end of the day.
Rachit, is it only in India that we don't have insurance products for crypto, or is it across the world? Is it different across the world?
Melanie, there is actually no insurance product right now which I feel are working across the globe. The beauty of this product is it's digital and it's globally accepted. So it will not happen that India will be behind and global other countries would be forward. It's not like that. So if there is a insurance company, of course it's going to be virtual. Anybody can go and take the insurance from them, and India will be at pace with other countries. But right now I do not see any companies coming forward for doing it, because of all the reasons that we have discussed. The risk are too high right now.
Hmm.
There is no regulation, and there are no companies who are willing to actually take this kind of risk on themselves, because they don't know how to control it. So
Yeah.
that's why nobody is coming front to give insurance for these digital assets.
Yeah, I think you're right. The possibility for extreme volatility, I think, is going to keep most insurance from jumping in too quickly when it comes to crypto. Instability in valuations, where three-figure value swings are normal. Which can also influence premiums. All of that, I think, is going to keep insurers at bay. And of course, this puts the onus more on people who invest in crypto to take care and to manage their assets really carefully.
Oh, absolutely, Meloni. I totally agree. And end of the day, think of it as a, tangible asset. I mean, what you do with tangible asset. I mean, you protect it, right? And you ensure that nobody robs it. You ensure nobody snatches it from you. Similar with these intangible assets, make sure the password is kept at multiple places. You don't leak it. Avoid pledging, trading it too much, because when you're doing that, somewhere or the other, you might get a pop-up and you will be very tempted to click on it and provide your details and gone. I mean, your digital assets will just go away. So do not do all those things. I mean, be very careful with your asset. Also, I strongly recommend cold storage because there the asset is very safe. It's not vulnerable at all, and it's in a protected environment. So people should explore that opportunity as well.
Right, Rachit, thank you so very much for all your inputs. Rachit Chawla, founder and CEO of Finway Financial Services Company, explaining to us why it's important that we take care of our own crypto, because right now there is no insurance product that protects it. Thank you all very much for joining us today.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.